There's a lot of people talking about a big bubble in the current stock market which is going to burst this year and which will make us all very poor. Okay, maybe not that, but I've heard that before. I've heard someone say it, so don't be surprised when you hear it from someone. But it is a fact that a lot of people are talking about a bubble in the current market which might burst in 2021, and yeah, I will tell you guys what I think what will happen and what I will do in 2021. But keep in mind, I am not a financial advisor. I am telling you this all as a friend. So let's get into it. So I personally think that people are over-exaggerating when they are talking about a bubble which will burst and create a stock market crash. What I do think what will happen is a big correction. The difference between a correction and a stock market crash is that a correction will make the market drop about 10 to 20%. A stock market crash will make the stock market go crazy, and that will make the whole market drop like 50% or something like that, you know, just like we've seen last year in March. But either way, I don't think that it will crash. And just like Kathy Wood said,
I'm sure we're going to go through a doozy of a correction this year.
So I do think that we will get a correction this year, but I'm not sure when it will happen, and yeah, we just can't tell. We'll have to wait and sit this out, and you know, eventually we'll see it happen at some point. But here are a couple of reasons why I don't think that the stock market will crash this year. So let's start off with the fact that companies can borrow money thanks to the Fed with a lower interest rate. This means that companies can borrow money and it will almost cost them nothing, and they can use that money to invest into their own company. And what I mean with that is they can use that money to maybe improve the quality in their company, maybe do some marketing or something like that. But they can use that money in the right way to make a bigger profit, and the interest that they'll have to pay on those loans are way lower. And compared to the dot-com bubble, it is significantly lower as well, because nowadays you'll have to pay about 0 point something percent to borrow money, but back then it was about 5%. So there were many companies who struggled to get a loan and borrow money because the interest rates were just way too high back then. This also means that the current PE ratios that are compared to the dot-com bubble PE ratios are a tiny bit over-exaggerated in my opinion. I don't think that you can completely compare the PE ratios with each other because of the loans and the whole different way of finances from now and back then. Another reason why is because saving became a lot less interesting for your average Joe. So just like me, and probably just like you, many of us are either students or work at a 9-to-5 job or something like that. And there's nothing wrong with that. But we all know that saving money into our bank account became a lot less interesting. The reason why is because the interest that you will get on your savings account has dropped a lot in 1 year. So for example, here in the Netherlands, we used to have at least 1% of interest a year. This used to be 3%, and if I'm right, it used to be even higher, like to the 4 and 5% a year. on interest, which is crazy. And because it's almost at 0% right now, there's a lot of people that will think, well, why would I put my money into my savings account if I can just put it into the stock market, get some profit, and boom, I'm richer. Well, that's what most people think. But if you're the right investor, you can definitely do it. I mean, sure, there might be a bumpy road around the way, but come on. If you'll get about 0% interest at your savings account, by the way, always save a bit of money. Don't use it all to invest into something. But yeah, there's a lot of people who think that it would make no sense to put some money into their savings account. There is a risk surrounding this all though, because there will be a lot of people just putting their random money into the stock market. The market might go too high at some point, and you will have a lot of people using their stimulus checks, their savings, etc., to invest into the stock market. The problem with this is that a lot of these people either have no experience or lack any form of knowledge to even be ready to invest into the stock market. Because right now it's a very bullish market and everyone could look like an intelligent investor. But that's the problem. Because a lot of people suffer from this thing called FOMO. And if you don't know what that is, it means fear of missing out. And if the market will drop a tiny bit or won't move for a little while, so let's say you invest into a stock and it isn't moving for a month or two, then there will be a nice amount of people selling their stocks because, well, it isn't interesting enough, or they are scared to lose more money. And the risk with this is that the market will be way more volatile compared to the normal stock market. And what if someone says, well, the economy is going bad, so the stock market must be doing terrible as well? Well, no. I'll keep this short, but the stock market isn't the economy. Alright, keep that in mind. And now we go into my plans for 2021 if we're talking about investing and finances. So I will keep on investing into the companies in which I trust and which have great fundamentals and good finances. I don't want to invest into a company where I will take the risk of it becoming a bankrupt company anytime soon. Besides that, I am not going to worry about a potential stock market correction or even a crash. Reason why is because I am a long-term investor. So when I buy stocks, just like I bought Tesla or some other companies, I was investing for the longer term. And as we've seen throughout history, there has always been a V-shaped recovery. The stock market isn't only going to drop and drop and drop and drop. It will go up at some point. And I mean, if I will have a lot of losses in one of these companies in which I truly believe in, then I will just simply average down. Two other things which I will look into is learning. I want to learn more about value investing, and I want to learn more about sales. So I recently quit my job as I'm not sure how to say it in English, but in the Netherlands we call it a junior account manager. Big shout out to my boss, by the way. He's a great guy and I'm very thankful for this opportunity that I had, but I had to quit because of my busy schedule and my plans that I had for this year. Either way, so I'm going to read some books about it. I've just ordered 3 books. Yeah, I also want to learn more about cryptocurrency. This doesn't mean that I will invest into the crypto market, because I haven't done that at all. I don't know anything about Bitcoin or Ethereum or Dogecoin, but yeah, those are my plans for 2021. I hope that you might have learned something from this video, and I hope that we can both learn more and grow more and become a great community surrounding finances, investments, and all of that type of stuff. So don't forget to smash the subscribe button, the like button, and a share would be great, but that's your own choice. Yeah, enjoy your day and keep it a 100. Peace, love, and positivity, and bye.